A shift in the capital Washington D.C. quote, S housing market is experiencing a period of significant change. After years of steady growth and high demand, the market is showing signs of cooling. Active listings are up, indicating a greater supply of homes for sale. Meanwhile, buyer activity has slowed. This shift is driven in part by broader economic factors. It's also closely tied to the unique dynamics of Washington, D.C., as a city heavily influenced by the federal government. The current market trends present both challenges and opportunities for buyers and sellers in the nation's capital. Understanding these trends and their underlying causes is essential for anyone looking to navigate the D.C. housing market in the coming months. One of the clearest indicators of change in the D.C. housing market is the sharp increase in active listings. Active listings represent the number of homes currently on the market. As of March 13, 2025, active listings in the D.C. metro area were up a staggering 56% year-over-year. This surge in inventory points to a potential shift in the balance of power between buyers and sellers. This increase follows a trend that began in June 2024. Inventory gains accelerated in January and February of 2025, rising 35.9% and 41% year-over-year respectively. This upward trajectory suggests that more homeowners are choosing to list their properties. It also suggests that buyers are proceeding with more caution. The slowdown in the D.C. housing market is closely linked to recent federal layoffs and funding cuts. Washington, D.C. has a high concentration of federal employees. Changes in federal spending and employment have a direct impact on the local economy, including the housing market. The recent layoffs have created uncertainty for many federal workers. This uncertainty extends to the housing market. Those directly impacted by layoffs may need to sell their homes or delay purchasing plans. Even those who remain employed may be hesitant to make major financial decisions. This hesitation contributes to slower buyer activity. The impact of federal layoffs on the housing market highlights the unique relationship between the federal government and the local D.C. economy. While the increase in active listings is a key driver of the shifting D.C. housing market, it's not the only factor at play. The influx of newly constructed condominiums and townhomes also contributes to rising inventory levels. Construction has been active in the D.C. area in recent years. This has led to a wave of new units entering the market. Notably, the share of new construction listings is skewed more towards condos than it was 5 years ago. This shift reflects changing preferences among buyers, particularly younger generations, and those seeking more urban living experiences. However, the increase in new construction also raises questions about affordability. The influx of luxury condos and townhouses may not address the needs of all segments of the market. Section 5. Price pressures, median listing prices trend downward. The increase in active listings and shift in market dynamics are putting downward pressure on home prices in the D.C. area. This trend is becoming more evident as more properties enter the market, giving buyers a wider selection to choose from. The competition among sellers is intensifying, leading to price adjustments. As of March 13, 2025, the median list price in the D.C. metro area was down 1.6% year-over-year. This decline is a clear indicator of the changing market conditions, reflecting a shift from the previously robust growth seen in the past few years. This decline marks a continuation of a trend observed in the fourth quarter of 2024, when the median list price also fell by 1.5% annually. The consistent drop over consecutive quarters suggests a sustained adjustment period for the market. While a 1.6% decline may seem modest, it represents a notable shift in a market accustomed to consistent price appreciation. For years, the D.C. metro area has seen steady increases in home prices, making this downturn particularly significant for both buyers and sellers. The decline in median list prices suggests that sellers may need to adjust their expectations in the current market. Sellers who were once confident in setting higher prices may now need to be more realistic and competitive to attract buyers. Buyers, on the other hand, may find more negotiating power as inventory levels rise. With more options available, buyers can take their time to find the right property and potentially negotiate better deals. This shift could lead to a more balanced market, benefiting both parties in the long run. Section 6. National Echoes. A look at housing trends across America. The trends observed in the DC housing market are not entirely unique. Across the nation, similar patterns are emerging, reflecting a broader shift in the housing landscape. From the bustling urban centers to the quiet suburban streets, the real estate market is undergoing significant changes. The national housing market is also experiencing a period of adjustment. This adjustment is characterized by fluctuating home prices, varying levels of inventory, and changing buyer preferences. Many potential homeowners are reevaluating their needs and desires, leading to a dynamic and evolving market. Active listings were up 28% year-over-year nationwide during the week of March 13, 2025. This increase in listings indicates a growing supply of homes available for sale, providing more options for buyers and potentially easing some of the competitive pressures seen in recent years. This national increase coincides with a decline in mortgage rates, which fell from around 7.25% in mid-January 2025 to 6.82% currently. Lower mortgage rates can make home buying more affordable, encouraging more people to enter the market and potentially driving up demand. However, the national median list price was down only 0.2% year-over-year. This slight decrease suggests that while there are more homes available, sellers are not significantly lowering their asking prices, possibly due to sustained demand or other market factors. This suggests that other factors such as regional economic conditions and local market dynamics are also influencing price trends. Different areas of the country may experience varying economic conditions, which can impact housing prices in unique ways. Furthermore, controlling for home size, the median list price per square foot actually increased 1.2% annually nationwide. This indicates that while overall prices may be relatively stable, the value of homes on a per square foot basis is rising, reflecting changes in buyer preferences and market conditions. Section 7, Ripple Effects, Potential Impact on Other Federal Hubs. The slowdown in the DC housing market raises questions about potential spillover effects on other areas with a high concentration of federal workers. Cities like San Antonio, Texas, Colorado Springs, Colorado, and Norfolk, Virginia, could experience similar shifts in their housing markets in the coming months. The impact of federal layoffs and funding cuts is likely to be felt beyond the immediate DC area. If affected households choose to relocate or retire elsewhere, it could lead to increased housing supply and potentially softer demand in these other federal hubs. Section 8. Navigating Uncertainty. A look at the road ahead for D.C. housing market. The DC housing market is currently navigating a period of uncertainty. The long-term impact of federal layoffs and funding cuts remains to be seen. However, the increase in active listings, coupled with the decline in median list prices, suggests a potential shift in favor of buyers. Those looking to enter the market may find more options and greater negotiating power. For sellers, the current market requires a realistic assessment of pricing and a willingness to adapt to changing market conditions. The road ahead for the DC housing market will likely be shaped by a complex interplay of factors, including federal policy, interest rates, and broader economic trends. Section 9 Conclusion. A new chapter for DC real estate. The DC housing market is in a state of flux. Over the past few years, we've seen a dynamic shift in the real estate landscape, influenced by various economic and political factors. The recent slowdown, driven in part by federal layoffs and funding cuts, marks a departure from the strong growth of previous years. This has led to a noticeable impact on both residential and commercial properties. The increase in active listings and decline in median list prices signal a potential shift in market dynamics. More homes are available, but they are not fetching the high prices they once did. Buyers may find themselves with more options. This could be an opportune time for those looking to invest in property, as the market becomes more favorable for purchasers. Sellers may need to adjust their expectations. The days of quick sales and high profits might be waning, requiring a more strategic approach to selling homes. As the nation's capital, DC is no stranger to change. The city has weathered many economic storms and emerged resilient each time. The current housing market is simply another chapter in the city's ever-evolving story. Each fluctuation brings new opportunities and challenges for residents and investors alike. Understanding the factors at play and adapting to the shifting landscape will be crucial for both buyers and sellers navigating the DC housing market in the months to come. Staying informed and flexible can make all the difference in making the right decisions in this dynamic environment.